Yo, what is going on, guys? What is going on? Can you guys hear me? Sorry, there was a technical difficulty that I was experiencing, but I think we're good now. I think we're good. Um, yeah, hopefully we're good. Hopefully we're good. What's going on? Avarup, Danny, Byron Payton, Chicago's very own, Richard Soren, Josh Davila. What's going on? Let me just remind people on Twitter as well as on the Discord that I'm live. 1 second. But how are you guys doing? Hope you guys are doing well. We're going to be covering the Jerome Powell. I guess it's a testimony today in front of the Senate, tomorrow in front of the House. So he's testifying in front of both branches of Congress. Now, in terms of what he's going to say, he's obviously not obligated to talk about interest rates. He's not obligated to really speak on anything besides, any questions that he's asked about the economy, even if they prod him, even if they prod him on interest rates, he's not required to discuss that until FOMC. Plus, remember that we have there's a few things that we have upcoming. On March 14th, we have CPI. On March 10th is Friday. We have the jobs report, and both of those things will be coming out before the Fed has to give their FOMC statement on March 22nd. So, he's not really required to give any sort of input on the interest rates. He probably will talk about it, but I don't know if he's going to talk about it to the extent that people want, right? Or the extent that the market wants. And so we could see a muted reaction. 1 second. Let me just tweet this out. I don't know. What do you guys think? Let me know in the comments. Let me know in the chat. What do you guys think about whether Jerome Powell is actually going to say anything significant? If he does, is he going to sound hawkish? Is he going to sound dovish? What do you think the market is going to do? Because in my view, I think the market really is looking for an excuse to move in either direction, right? They're looking for volatility, and we may get that. And I'm going to be opening up a chart here in a second, and we will be going over how the market is behaving this morning. It's probably flat because they are still waiting on, the market is still waiting on what Jerome Powell has to say. But let me know what you guys think. I'm just going to blast this off one more place, and then we will get right into it. All right. Let me go to the chat. How you guys doing this morning, by the way? Hopefully you guys are doing well. Hopefully y'all are doing well and it's not bright and early. It's so funny. I got a comment on Twitter saying, how are you going live at 6:30 in the morning? Don't you know that people have jobs? And yeah, I know people have jobs, which is why you can watch this later, which is why you can, sneak on your phone and watch this. I understand not every job is created equal, but what do you want me to do? Not go live? All right. Here we go. Let me pop out this chat. Okay. Live now to cover Jerome Powell and markets reaction. All right. I promise just one more second and then we will get to it. Cool. Tweeted. All right. Let's go over what is going on with the markets. And then also, if you guys can do me a favor, if you are aware of any, like if you're aware of where they're going to be streaming this, in terms of the YouTube channel, just post it in the chat below so that I can pop open the stream. Otherwise, let us get right into it. Okay. Cool. Here we go. All right. VXX. So you want me to look at the VIX? Hit the like, fam. Yes, guys, hit that like so more people can find this stream. Positive, what's going on? Cody Schaefer, what's going on? George Kiriakou, what's going on? Anwar Hussein, what's going on? Salu, Madling Fong, what's going on? All right, Rhett Brown. Madling Fong says she thinks that Jerome Powell is going to be neutral. Yeah, I don't think he will get. Okay, here's the thing. Like, I'm a poker player, so I don't think that there is much upside in Jerome Powell showing his hand now. Again, we have the jobs report on Friday, and we have the CPI on March 14th. So why would he come out now and tell you exactly what he's going to do? He's going to wait for that data in case it is good, instead of coming out hawkish now. But he probably will sing and dance the same tune, saying that we have a commitment to fight inflation, jobs not done, etc. But is he going to come out and say, we're going to, last FOMC, we raised by 25. Guess what? We're going to do by 50 now. 7:30 here, and I'm retired, so I'm awake. It's 6:30 here. And remember that this is a St. Jude live stream. So instead of hitting that super chat, hit the live stream St. Jude fundraiser. So hit the fundraiser button instead of the super chat. It would be nice to hear someone question him on his opinion of financial conditions tightening when they aren't. Yeah, this is so funny because on the Fed's own website, it says that financial conditions were loosening. Financial conditions index, Fed website. I'll show it to you. It's actually on their website. Yeah, which is crazy. I agree with you. But he did reiterate that. He reiterated that financial conditions were loosening, which I don't see how. All right. Let's see what the market is doing. So market so far, very muted. It's actually perfectly flat, 0%. That's the S&P 500. If we take a look at the NASDAQ is up slightly, up 0.25%. And if we take a look at the Dow, the Dow is also flat, negative 0.09%. So nothing to write home about. Here you see Powell to talk to Congress about the possibility of more interest rate hikes. Down here it says Powell will testify on Tuesday to the Senate Banking Committee and on Wednesday to the House Financial Services Panel. Both hearings are set to begin at 10 a.m. Eastern. By the way, guys, if you found the YouTube channel where they're live streaming it, put it in the chat, please, so that I can click on it and not have to go digging for it. Otherwise, I have no problem digging for it. But just let me know. It says the economy has perked up, job growth shot up in January, and revisions to the data erased the sense that inflation was cooling. Powell is going to emphasize that the Fed has more work to do, that the job is not done, and that they're going to keep at it until the job is done, said Laura Rossner Warburton, senior economist at Macro Policy Perspectives. Recent economic data is putting pressure on the Fed to be more aggressive in its monetary policy. Yes, I agree with this. Although I don't think that Jerome is going to say anything definitive here. Byron Mystery donated $10. Thank you so much, Byron. Appreciate you. If you have a question, put it there and I will prioritize it. Thank you. Cybertruck Duo, what's going on? Omar, how you doing? Back to orthodoxy, what's going on? 8 minutes in, let's go. Sorry, man. Sorry. I can't make Powell talk faster. What do you want me to do? He said he's going to show up at 10. He's going to show up at 10. I can't make him join faster. What do you want me to do? Market will rally as he is too soft. Well, yeah, and let's take a look at a few other data points. This isn't really going to indicate whether the market will rally or not. But looking at the camp of the 50 basis points, it's now at around 30%. It's been 30% for the last couple of days. It was at 24 a month ago. It was at 9, and now it's at 30. And the reason that it's at 30 is twofold. One, strong jobs data. Two, because inflation came back roaring in parts of Europe. So Germany and France actually saw an increase in inflation. So it looks like inflation, was ticking down a bit, and then now it is going back up in Germany and France, and those are the two biggest economies in Europe. So the thinking is that there's a possibility that might happen here. And if that happens on March 14th, I do think that we will actually see the market start to drop again, right? So if we take a look at the macro picture of the market and we zoom out, we had the October lows, and then we had a retracement in December, and it was really off to the races. And we're seeing a retracement now. Now, the trend technically is still intact, right? This trend line, if you're just taking this trend line, technically this trend line is still intact. So in this case, what is going to make the market break this trend? I think, to me, it will have to be something drastic, like inflation coming back up. So if inflation, instead of dropping to, I think it's expected that inflation drops to like 5.9% year over year. If that ticks back up and is even higher than last month, which was 6.4, then I do think the market will at least revisit the December lows, and depending on how bad it is, could even revisit October lows. But beyond that, honestly, I don't think there is a catalyst for the market to revisit October lows besides, one, a much higher than expected rate hike, two, much higher than expected inflation. If you don't see those things, I don't think there's an impetus to revisit October lows. That is my opinion. What do you guys think? Would love to hear from you. Papa Powell will definitely be soft like butter. Markets will rise. What's up, brother? I'm back in town. Back in town in Dubai. What's going on, Doc? Just my thoughts live stream. CNBC live. Oh, CNBC's carrying it. Okay. Let me actually look at this. Where will Jerome Powell testimony stream? I mean, I do have CNBC live, so let me pull it up and see. It says they are on a break. So we will pull this up here just in case. Thankfully, they are muted. All right. And for those of you that are on the stream, make sure that you follow me on Twitter and make sure that you follow me on Instagram. Both of those links are in the description. I send out free daily trading and finance content every single day. I give trade ideas. I give macro views, tidbits on how to trade, the psychology of trading, how to technically trade, how to do technical analysis, etc. It's free. So follow me. Link is in the description below. Make sure that you are following me. What are your plays for today? I mean, I don't have any plays. What I'm looking at right here, if I'm looking at the S&P 500 on the 5-minute chart, it looks like we are taking liquidity down here, and I'm actually looking for a rally at the moment before Jerome Powell speaks, a small rally potentially. And I'm not really playing the breakouts. What I'm playing is the retracement. So if we do get a rally, I will look for a retracement before entering. Obviously it's tough on a day like this to trade in an optimal way, right? Because Jerome Powell is going to speak at 7 on the West Coast. And I think that as soon as he starts speaking, you're going to see the market go haywire, right? If you are trading optimally, today is probably not a day to trade, or you wait until he's done and then trade the aftermath of the hyperbolic overreaction, right? So we could, as you see often on CPI, you often get moves where we shoot up, shoot down, shoot up. Like, that's not optimal trading. Yes, you can potentially catch a leg of that wave, but that's not really optimal trading. So what I'm looking for is, an overreaction, and then looking to trade the aftermath. I don't know what Jerome Powell is going to say. Nobody knows but him. So I can't tell you what I'm trading beforehand if I'm bearish or bullish. I'm really not holding any positions here. So, it looks like we took liquidity down here on the sell side, which is, in the form of sell stops, right? It looks like we took liquidity here, and now the market is trying to determine which direction it wants to go. Are we going to bounce from here? And what you typically see is after sell side liquidity is taken, then we shoot for the other side of the market. Remember, I said that the market on a day-to-day basis is just a series of taking liquidity on both ends, right? Or will Jerome Powell come out hawkish and, we eventually start breaking to the downside, and then now have to look to other support areas or other liquidity areas, like this one here from back on March 6th at around, the 4,040 level. Who knows? Let's see. But in terms of trades beforehand, I don't have any trades on the S&P 500 or on the Nasdaq, right? I'm looking to play the aftermath. I think that the aftermath of the reaction, you'll have more than enough opportunities, honestly. Our credit put spreads the way to do what? I'm not sure what your question is, Leonardo. You said our credit put spreads the way to do what? Have to be more specific. Do you think it is the right time to enter into China plays? I will not buy Alibaba. That's just, for me, I'm not investing in China in the long term. If you're talking about trades, yeah, certainly there are trades to be had. But no, I'm not investing in China. It's just not my cup of tea. It's not my play. But in terms of trades, yeah, I mean, there are trades to be had. If you do like China, check out KWEB, which is the China Technology ETF. It's kind of like their NASDAQ or their triple Qs, right? But yeah, again, I don't, the reason that I don't invest in China, it has nothing to do with the companies themselves. It has to do with the landscape, right? If the Chinese government can come and shut off your tap whenever they want, like in the form of Alibaba, if they can dismantle your company anytime they want, if they can lock you up or shut you up if you're a CEO anytime they want, why would I invest in that landscape? Just tell me about that, right? Like, why would I invest in that when companies are not left up to natural market forces, right? There's just no reason for me to invest in that. There's plenty of companies in the US and around the world that don't operate in that environment. But sure, you can make money trading it. North Shore Girl, thank you so much. Donating $5 to St. Jude. Appreciate you. Another $5. Thank you so much, North Shore Girl. If you have a question, leave it in the chat and I will try to prioritize it. Thank you. You and Byron so far are the stars of the day. So thank you so much. What's up, Z? Do you follow UFC? What did you think of John Jones? Yeah, I follow the UFC very closely. What did I think of? I thought we didn't get enough chance to see whether John Jones is actually good at heavyweight. I mean, and I thought Cyril Gane looked like he was just in there for a paycheck. It didn't look like it looked like he was scared. It looked like he didn't want to take damage. At some point in that exchange, it looked to me like he gave up. And yeah, I mean, that was a nice chokehold by John Jones. But with your back to the fence to allow John Jones to get there so easily, it means that at some point you gave up. And I think he did give up. And he got a nice fat paycheck, probably got more money than he did in his entire life, and is happy playing FIFA. That's what I think. Can't be the GOAT in my opinion because he's juicing. Guess what? Everybody's juicing. Everybody's juicing, including your favorite soccer player, including your favorite basketball player. Juicing right now, I mean, you have AI in terms of emerging technology. Juicing is probably right under that. The technology that's involved in juicing right now is crazy, and it's so far beyond the technology that allows that allows juicers to get caught, right? The mechanisms that USADA and VADA have in order to catch people juicing is so behind the curve. And yeah, unfortunately, everyone's juicing. Let's see what CNBC. God, they're still on commercial break. Market so far super flat. Dow Jones 0.04, S&P 0.01, Nasdaq 0.17. Clearly waiting for Jerome Powell's comments. When you see that, you know that the market is waiting for any sort of excuse to rally or tank, right? So hopefully CNBC is actually going to be live streaming this, and if they do, we will have it up. Although I don't know. Let me see. Let me look at the Fed's YouTube channel. Are you guys sure that CNBC will be live streaming this? Let me look at the Fed's YouTube channel. Federal Reserve videos live. It's not on the Fed's YouTube channel. All right. Senate YouTube. Oh, it will be live on Capitol Hill. Okay, let's listen in a little bit and see what's what.
In recent weeks, and even given some of the data that we're not going to get until later in the week. But we will hear from the Fed chair beginning in about 13 minutes at Senate Banking. We'll bring that to you live, including the Q&A. Don't go anywhere.
Cool. Okay, so they will be live streaming it. Audio is working. If it's not, let me know. Audio is working. We will be live streaming it. Yeah, let's see what's on the options day trade watch list today. And again, guys, follow me on Twitter and Instagram for free daily trading and finance content. And if you guys are so inclined and you want access to our watch list, 60 plus videos of courses, all of our analysis, alerts, the chat, we're on every single day, pre-market to aftermarket close. Hit that Academy link in the description. But this is, I will give you guys this today. I'm gifting it to you. Here's a watch list for today. The way to read this is if we are above a certain level, right? In this case, like triple Qs, if we're above 301.50 and we break out above there, then we're taking the 304 call. If we're below 299.70, we're taking the 297 put. If you guys haven't day traded before, I would say, don't try this without paper trading at first. But pause it, screenshot it, do whatever. And yeah, hopefully you can use it for your reference. Tommy Luck, thank you so much, donating $5. How long will he be speaking for? I don't know. I mean, that's like, isn't that kind of rude to ask, bro? That's like going to, going to a wedding and asking immediately when you get there, asking, how long is this thing running for? I don't know, bro. I'm just here for y'all entertainment. All right. You can jump in and out. You can watch it later. Do whatever. You have to be blind to think they're not juicing. Yeah, of course they're juicing. Of course they're juicing. I mean, even look at the, you know how you could tell, and this is not sexist. I think that almost every athlete is juicing. But the way that you could tell is the female fighters, which that Valentina fight was awesome, by the way. Their necks, like look at the size of their necks, right? Because of the unnatural levels of testosterone, you could see the women fighters with the bulging necks. Kind of like if you guys remember Barry Bonds playing baseball, he had juice so much that his neck and his head started to grow. He even had to change hat sizes. That's how big his head got from juicing. So yeah. Are we there yet? No. We have 3 minutes. All right. Let's see what CNBC has to say. They're useless talking heads.
YSC. We're going to talk energy rates and much more ahead of Fed Powell testifying before Senate Banking on Capitol Hill. And to do that, exclusively here on Set at Post 9 is EF's Chairman and CEO, Craig Arnold. Congrats. 100 years is impressive. Big deal.
Thank you. It's certainly a momentous occasion for our company to be around for 100 years, to be one of only 32 companies listed that long. And certainly it's an important milestone for our company.
Boo. Super boring. We're going to wait for Jerome Powell. I don't know who this guy is. Bhavneet Kamal donated $5. Appreciate you. Thank you so much. Jason Garcia, when are we getting a vlog of your traveling? I don't know. I might start a separate channel, to be honest. Obviously, again, follow me on Instagram. You'll see a bunch of my reels and stories and whatnot, but like a YouTube channel, I'll probably do it on a separate channel, honestly. I'll probably do it on a separate channel. Chaelson commenting on Jones juicing and knowing his secret because it was also his secret. Yes, I saw that. Super rude, like always. Who? Saris, who are you talking about? And what are you talking about? I have a feeling it will be a nothing burger. Yeah, I have a feeling too. I have a feeling that, but clearly the market will react because the market is not going to be flat forever, right? Like how many days do you remember waking up and the market being at almost 0%? Right now, the S&P is negative 0.04, so basically flat. NASDAQ is at 0.12, which is crazy for the NASDAQ. And then the Dow Jones is at 0.04 as well. So, the first half an hour of the market is usually the most volatile when the market opens. So, if we're not getting any volatility, then what do you think is the case, right? I think Meta starts to lose steam here. I think Meta might retest this high, but I think it starts to lose steam. I'm looking at potentially shorting Meta again. QuantumScape, for those of you that are part of the Discord, part of the Academy, know that we continue to short QuantumScape, down another 4% today. Amazing. I'm targeting $8, but I do think that this momentum, we could potentially get it. Get it in the high sixes, and that will be music to my ears because I shorted a shitload of shares of QuantumScape. And by the way, don't always think in options terms, right? The reason that I shorted QuantumScape shares as opposed to buying puts is because I did not know, the puts were very expensive. The IV was very high. And two, I did not know how long it would take this move to happen. And so I didn't want the premiums on the puts to get killed. And if I'm shorting the shares, I'm not getting killed by Theta. I'm not getting killed by Vega. I could just hold the shares short and let it drop. So shout out to those of you that took the QuantumScape short. Working out beautifully. Can't wait till we get, hopefully we get in the high sixes, but I am targeting $8 realistically. So let's see what is going on. Wow, CNBC still doesn't have Jerome Powell. They did say on the commercial break 13 minutes. So I don't know if he's testifying at 10:15, but wow, did the S&P just drop? Let's see. I think the S&P just dropped. Yeah. Negative 0.5 on the S&P. Guys, let's see. Rates higher for longer, says Jerome Powell. Where are you guys reading this? And why the fuck isn't CNBC? Here we go. Fed Chair Powell says interest rates are likely to be higher than previously anticipated. If you guys have been following this channel and you've been following my, me looking at the Fed funds rate futures, the bond curve, already they were betting that rates would be higher for longer. I'm not entirely sure why the stock market is so surprised, but let's dig a little bit deeper. The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is going to likely be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. He says your CNBC is 15 minutes behind. Is it? Let me see. Here we go.
That he is embracing this possibility of faster rate increases. That is returning to 50 basis points. And I do want to check while I have you here, Sarah, what's happened to those probabilities. Okay, this is really interesting. You've had an increase in the probability of a 50 basis point hike in March. It had been, I'll give you the number here, 23%. It is now 37%. But more interesting, and I've been following this for a few days now, is this probability of a 50 in May, Sarah. And I'll tell you right now, that had been at 41%. It already was elevated, and now it looks like it's at 70%, the probability of 50 basis point rate hike in May. So that would bring us right up to 5.25, 5.25, 5.5. And guys, I don't know if you have the Fed rate outlook chart on the able to bring it up right now, but I can tell you what those numbers are. The new peak rate is 560. That's a new record for that contract. Year end 544. That's a new record for that contract. And then also, Sarah, something we've been monitoring is the back end of this into the 2024, and that's now for June of 2024, 480. So across the board, you've had this rise now in the outlook for the funds rate as the market, I think, positions itself for the possibility of higher rates for longer if the data indicate that's what the Fed needs to do.
Got it. Steve, thank you very much. Stronger dollar, weaker stocks.
Sure.
We've dropped a little more than 100 points. We're down 148 or so on the Dow. We were up about 15 before Powell. Steve Leisman, thank you. We'll turn to you as we await that Q&A from Chair Powell before Senate banking and continue the conversation about what this all means for the markets. Goldman Sachs Chief U.S. Equity Strategist David Kostin joins us on set. It's great to see you.
Nice to see you, Sarah.
Anything here change your view? You're what, 4,000 for the S&P, which is basically what we are. Are you monitoring the May and the June rate hike probabilities to help determine what to do with stocks?
Sarah, what matters is what the market prices. And in the equity market is already pricing the idea the economy is pretty strong. Why do I make that conversation? Because cyclicals relative to defensive stocks would imply an ISM closer to 54. The last reading was around 47, 48. And so the equity market has already embraced the view that the economy is continuing to grow. I was just visiting clients in Asia. They broadly are of the view, in line with ourselves, that the market is essentially flat and fully pricing in the equity market the idea of the economy doing pretty well. I call it the four no's. You got no recession that's imminent. You got no earnings growth. You have no change in valuation, and you have no net money flow into the market. And that basically would drive a view that the market is basically fully priced at around 4,000.
It also drives the view that the Fed has more work to do. And that's what we just got from Fed Chair Powell's testimony, that they could speed up hikes, that they could go higher for longer if the data warrants. And if that's the case, doesn't that ultimately pressure the market multiple?
Well, many investors are anticipating already that the Fed could be tightening as high as 6%. Now, Goldman Sachs economics view is probably 5.5%. Obviously, there's a risk to the upside to that, but that's, I think, already priced largely into the equity market. Basically, that's anticipated. Much of the conversation with investors is about how companies are going to prioritize their spending. And the idea of companies continuing to buy back stock, pay dividends, that is what gets rewarded historically in an economy that is slowing. Not a recession, but it's slowing. And that's
beyond commodity prices is more profit margin expansion than wage cost pressures. Think about that. From a chief economist at UBS, I'll say it again, they've taken advantage. These companies have taken advantage of circumstances to expand profit margins. The broadening of inflation beyond commodity prices is more profit margin expansion than wage cost pressures, unquote. The Fed, understandably, the Fed can't force corporations to change their ways or rewrite the Wall Street business model on its own. But the Fed can talk about it. High interest rates, falling wages, increasing unemployment are all hallmarks of failed policies that end up helping Wall Street, the largest corporations in the country, the wealthiest people in the country. Because let's be clear what we're talking about when people use the economic speak.
By the way, I hate this guy.
The economy means laying off workers. Lowering demand means workers get fewer raises. Of course, there are times when the Fed must act. We can't allow inflation to become entrenched. We've seen encouraging trends. That is that.
Jason Gray, I'll talk about the QS Sure. I'll go over it. We'll do a trade review after this so I can show you exactly what I was looking at on the chart and what my trading strategy is. So we'll do that.
Bring critical manufacturing back to the U.S. We can rebuild our infrastructure. It's what we're doing with the CHIPS Act, with the Inflation Reduction Act, with the bipartisan infrastructure bill. For the first time in decades, we're finally recognizing the damage that I and many of my colleagues warned the corporate offshoring would do to our economy. Look at East Palestine, Ohio, a community that Senator Vance and I have visited a number of times recently. America learned about this small town last month when a Norfolk Southern train derailed and spewed hazardous material into this community. East Palestine is more than just a disaster headline. Columbiana County was once the center of American ceramics manufacturing, at one time producing 80% of.
Blah, 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 blah. All right. When Jerome Powell gets on, we will leave this up here in the corner like this. And when Jerome Powell gets on, we will unmute it. I get so tired of hearing this guy talk. Mr. Brown, he asks the dumbest questions that have nothing to do with policy. Swear to God. Like, it's always like right now, I think he's talking about, the train wrecks in Ohio, which obviously are important, but are they important to what Jerome Powell is going to do with interest rates? I just don't understand. It's like he almost uses his chair, his Senate chair, as his Facebook page, right? Like, he goes on about all these different grievances, which could be important in a different context, but Jerome Powell always looks at him like, dude, what do you want me to do? Like, what do you want me to do? Pretty soon he's going to be like, he said, Mossab says, please, let's listen. You want to listen to this guy? All right. I mean, if that's what you guys want. Do you guys really want to listen to this guy? Let me know. Or is Mossab the only one? Because, I do whatever you guys want. So what's the cause of the huge spy dump at 10? Ay. What am I going to do with some of you? What am I going to do with some of you? What is the cause of the huge spy dump at 10? Why did you click on the stream? You clicked on the stream because we're going over Jerome Powell and Jerome Powell's comments. Well, Jerome Powell came out and said rates will be higher for longer at 10. Oh my God. Okay, nobody wants to listen to this guy besides you, Mossab. I don't know, bro. I think you're outnumbered. I don't know what you want me to do. No way, cancel Doodoo Brown. Oh my God. He said puts printing on SPY. Yes, if you took the puts from the watch list or QQQ from the watch list, puts are definitely printing. So let's look at the levels. QQQ was 299.70, SPY was 404, and thank you, Dr. Flox, for these levels. But if you look at QQQ, 299.70, we're currently at 296.98. So a nice breakdown, straight shot through, from that level. Why is my chart looking like this? There you go. Whoa. We had at 10 a.m., Jerome Powell started talking and the market just started tanking. But I wouldn't short this, by the way. I think it's too late here. I think you played the move and you get out, right? All right. Same with the S&P 500. Do you trade or provide technical analysis on natural gas futures? Not me personally, but other analysts in the group. Yeah, for sure. Are all your day trades 0 DTE? No, you're crazy. 0 DTE doesn't make up even 0.5% of the trades. No. What do you think of GME? I don't know. Ask a more specific question. You didn't know you were teaching kindergarten this morning. VIX moving up. Yeah, I talked about the VIX before. And how we saw the most number of calls on the VIX since March 2020, since the pandemic. But the VIX is a horrible way to trade, okay? Once in a blue moon, like if you can catch if you buy VIX calls and you catch it right before the big move, it can be lucrative. But otherwise, buying and holding the VIX, the premiums just tank like crazy. Let's see what this guy's saying.
To see the absolute devastation caused by their out-of-control spending is remarkable. Remarkable. To stop the out-of-control inflation caused by the out-of-control spending, the Fed steps in to cool the economy. Well, the definition of cooling the economy is necessary because we've seen the most radical approach to a problem that was in our rearview mirror being used as a Trojan horse to bring in a level of socialism and spending that our nation has not seen in my lifetime. The facts are very simple. When you get to 9.1% inflation in this nation, as a kid who grew up in a single-parent household, mired in poverty, a 40% today, 100% just a year ago increase in the gas prices devastates single mothers around this country. For seniors on fixed income whose savings are being depleted with an average cost just last month of a $433 increase because of inflation. For my friends on the other side of the aisle to look any place besides a mirror, I find stunning. The truth is that when your food prices go up over 20%, when your electricity is up over 20%, you have to ask yourself, where in the world are they?
All right. I can't wait for Jerome Powell to clap back. I want to see what he has to say. Z not monitoring the Discord. We got some funny memes going on. Yeah, Josh. When I'm away, you guys mess around. You know that those memes should get taken down because we don't want a Discord full of memes. But Ryan Wing, this dude is a hack. Who? This Mr. Scott dude? Why is Mr. Scott saying about children? What is his goal? I don't know. I think he's just saying that inflation is out of control. But what these people do is honestly they are they're really like they all have goals of running for office or staying for office, and they use these as their stages, right? This is like performance art. That's why you see Senate speakers and House speakers act like they're in a fucking Shakespeare play every time they get up here. Like they can't just ask Jerome Powell a question. They prepare these speeches beforehand, and they wake up knowing that they have a performance to give. So that's what that is. All right. So we see the reaction on the S&P 500 down 0.9. The thing is, what's crazy is obviously, like I said this morning, I said we're going to get a big reaction because the market was flat. And on what day can you wait half an hour after market open and see a flat market? That just doesn't happen. So when the market is completely flat for the first half an hour, then you can expect there to be some volatility. Now, Jerome Powell said they're going to raise rates and keep them there for longer. He said that before. Other Fed members have said that before. He said that rates are going to have to be higher than expected. I mean, if you look at the federal funds rate, like let's just take a look at the federal funds futures for October, you could see that, you know, it was already projected to be above 5%, right? In this case, 5.5%, 5.51%, or almost 5.6% by October, right? So the bond market was already betting that rates would be higher for longer. Where did I lose? I lost the window, but the bond market was already anticipating rates would be higher. The Fed funds futures were already anticipating that rates would be higher. Let's listen to Jerome Powell.
Scope to address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case of our independence. You further noted that, and I quote, without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools to promote a greener economy or to achieve other climate-based goals. We are not and will not be a climate policy maker. Do you still stand by those comments?
I do.
Thank you. Finally, I know we're not in the question. I know. I get it. Finally.
You now have 4 minutes and 12 seconds.
Yes. I knew the chairman would dock that from my time, and I appreciate you doing so
With a sense of humor.
with a great humor. Great humor. Finally, several of my Republican colleagues and I sent a letter to you discussing Vice Chair of Supervision Michael Barr's plan to conduct a holistic review of capital standards. I look forward to discussing those capital standards during my Q&A, and I will thank you for our recent conversation that we had that helped illuminate some of the necessary challenges that we face as a nation and your answers to it. Thank you, Mr. Chairman.
Thank you. Speaking of illuminating, thank you, Senator Scott.
Yes, sir. Thank you for allowing me to use this.
Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on monetary policy in the state of our economy. And I don't expect Chair Powell to weigh in on the mini debate we just had, but I think we all know that the debt increase was much larger under President Trump and a Republican Senate than it has been since. Chair Powell, thank you for your service and your testimony today.
Here we go.
Chairman Brown, Ranking Member Scott, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We have covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I'll review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we'd seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with revisions to the previous quarter, suggests that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above the FOMC's longer-run objective of 2%. The 12-month change in total PCE inflation has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, There's little sign of disinflation thus far in the category of core services excluding housing, a category that accounts for more than half of core consumer expenditures. To restore price stability, we'll need to see lower inflation in this sector, and there will very likely be some softening in the labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy has slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remained very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historical lows. Turning to monetary policy. With inflation well above our longer-run goal of 2%, and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past 2 meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Federal Reserve, we will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Mr. Chair. There are 23 of us on this committee. Almost everyone will be here today. I ask each of us to stay as close to the 5-minute mark as we can because we have votes at 11:30. So thank you all for your cooperation. Chair Powell, thank you. Job growth is strong as unemployment remains historically low. You might not know that from the opening statements. Many drivers of inflation, corporate greed, rising inequality, supply chain disruptions, Russia's bestiality, if you will, in Ukraine, won't get better because of interest rate increases. Every indication is that this post-pandemic economy is different. Should we be worried, Mr. Chair, that the Fed is treating this economic period as it has in the past instead of reacting differently?
Thank you, Mr. Chairman. So we've been aware since the very beginning and have discussed this publicly on many occasions that there are some differences this time. We, in particular, have not seen the kind of supply side collapse that we saw at the very beginning of the inflation outbreak. Also, the outbreak of a war, which had significant effects on commodity prices a year ago. So all that is different. There are also, though, some similarities. There is a mismatch between supply and demand. You can see that in the goods sector still. You saw it in housing prices going up over 40% since before the pandemic, and you see it in the labor market where we have 1.9 job openings for every opening, for every unemployed person. So we're well aware that this particular situation involves a mix of cycles of forces, not all of which our tools can affect. But there is a job here for us to do in better aligning demand with supply.
Okay, understanding you have limited tools to address inflation, in our conversations in the past show my concern about continued rate increases that may not actually address the root cause of inflation. They hurt workers, and many of us contend we can't follow the same old playbook. Next question. Last year, 3 banking regulators issued proposed updates on the Community Reinvestment Act to account for changes in our banking system. My question is, does the Fed remain committed to work with FDIC?
All right. So I've been following you guys on the chat. Drew Tube says bestiality. Yeah, he used that word with reference to, I guess, Russian aggression in Ukraine. But what's funny is, yeah, I mean, he has not really changed his tune, right? Like some of you said that it's the same speech that he's been on for, the last 2 years. And it's true. He probably didn't even have to change the script. He's on the same speech. Honestly, he didn't really say anything too crazy. The thing is with the stock market, I mean, one day reaction doesn't mean anything. Whether the stock market rallied today or tanked, he's going to do the same exact thing tomorrow. And another thing to remember is, one day doesn't mean anything. We've seen counter reactions before off of one day, and then the trend continue. For me, this is a nice drop if you had puts or if you were playing short on futures or whatever. But in terms of the larger trend, nothing has changed. This is still the trend that we've been on since October. Now, if you zoom out larger than that, we are in a failed inverse head and shoulders. But if we're just looking at this uptrend since October, we're still there, right? So, this doesn't really change anything. And I don't think that his speech today or tomorrow is really going to fundamentally change what goes on with the trend itself. We may get, up down candles while still remaining in the trend. What is going to buck the trend is if, he comes in and raises rates higher than expected on March 22nd. I don't think so. The Fed does not have a history of usually slowing down and then ramping up unless something is drastic. So, if CPI comes in on March 14th and it's higher than expected, so and I'm really talking about year over year, not even month over month, because that seems to be the number that elicits the most reaction. So if, last month came in at 6.4, let's just say the next inflation is at 6.5 or above year over year, then I do think that the market actually starts searching for recent lows, first targeting those December lows. And then depending on how bad it is, depending on what the Fed does thereafter, we could hit those October lows. But if inflation comes in much cooler than expected or as expected, and the Fed does 25, I do think this trend remains intact and the market can, start trading sideways or going up slightly. I don't see an impetus for a major bull rally either. Inflation would have to come in significantly lower than expected. But in terms of the target rate, as I've said before, look at the bond market, look at the Fed funds futures. We are going to be at that 5.5% at some point later this year. And we may not even get a cut until December or maybe not at all in 2023. So you know, that the bond market and the Fed funds futures market have already known this. The stock market is the only one that's really rallying like this, because the stock market is forward looking, right? The stock market is based on in optimism. The stock market does not usually make a good prediction about the economy. The bond market is a much better predictor of the economy. So it's so funny. Like, Jerome Powell didn't really say much. So initially, you did see, you know, that major reaction down in this candle here, and now we are trending back up to sort this imbalance. I would be interested from taking a short after this imbalance is addressed. You know, with a tight stop limit. I wouldn't play options on a day like today because the IV crush and the theta decay, if you are wrong and have to hold those options until tomorrow, will be very violent. But futures, I don't mind trading that at all. Now, you guys wanted me to go into the QuantumScape short, and then I will take a look at any chart that you guys want, or talk strategy, talk trading. And then let me know in the chat if there's something important that I should come back to with this Jerome Powell speech that you want me to address. Otherwise, you know, I'm just going to take a look at, I'm going to take your questions and take a look at the charts. I'll be very interested to see what happens after this imbalance is filled, if we do start heading back down. Because, you know, at the end of the day, like someone said, this is mostly a nothing burger, right? So it looks like, let me see if there's anything on the weekly. Huh. All right. Yeah, it looks like intraday, you know, we're taking liquidity and now jumping back up to the other side. But are we going to actually, is this just a retracement where we then head back lower? Or do we continue higher and seek the other side of liquidity? With 1 day left in this testimony, with him not really saying much, I don't really think, you know, there's impetus for making violent lows today, right? Like this liquidity wick here, this might be it, right? We'll see. But yeah, in terms of how to trade this, if I was trading this live and I didn't catch the breakout, which I normally don't do, then I would look for retracement. So I'm looking to see, once we hit this 0.5 mark of this imbalance, I'm looking to see how the market is going to react. Usually what you tend to see with violent moves is you see a huge move down, and then you see a retracement, and then finally another move down, right? But let's pull up a fib as well and see where we are on the Fibonacci level. Yeah, I'd be very interested in this 0.5 level because we have the golden pocket here too. You know, and if I did take a short here, I would place a stop limit very shortly above that, and then target this area of liquidity. But you know, with doing the live stream and not really paying attention to every single move, I would be more reluctant to do this now. But this is essentially the move that I would be looking to make. What do you think about the SPY price for end of the week? I don't know. I'm not a fortune teller. That's not the way that TA works, honestly. But I will go over that QuantumScape trade. I just want to see, I'm just very curious to see what happens with the S&P 500 here once we hit this 50 level of imbalance. But I do agree with you, Romies. I think, you know, there is a chance that this entire gap gets filled. Let's see. It's just, I wouldn't start thinking of shorting until we hit at least this 0.5. But yes, in reality, this entire gap could get filled. And the way that you would enter such a wide gap is, you know, you would scale in starting at the premium level, which is above the 0.5, right? You would scale in starting here, targeting this area here. Can you look at Meta to the upside? Yeah, I will look at Meta. I got out of Tesla call with 1.85% gain. I got crushed. How did you get crushed? CH Feek. Yeah, again, I'm just awaiting this reaction. I'm really curious. I'm sorry. I'm just really curious to see how the market reacts to this level here. Let me pull up another chart just so I'm not. Tesla and then QuantumScape. What else? Meta. Someone said Meta. I mean, Tesla is, been hovering in the 190s really since Jim Cramer tweeted that Tesla is a buy. I think he tweeted this on February 28th or 27th. And since then, Tesla's been down over 10%, of course. And then if we take a look at Meta, was rising on hopes of AI, something to do with AI, right? And I'm looking to short Meta very soon. Maybe around this level, but hoping that we actually touch like the 190, 195 level before shorting. So I'm looking to short Meta soon. And then let's take a look at Apple. Apple currently is down 0.3%. This doji right here, this might be somewhat of an evening star doji or whatever you call it, inverted hammer. Doji nerds don't get at me, but you know what I mean. This melted candle right here, right? This could be a potential top for Apple. Please, can you check gold? Wow, the most boring thing on the market. What do you want me to look at gold for? What about it? What's the question? Jim is inverse Nostradamus. All right. So someone said, I want to see what happens at that 0.52. There you go. Right? This level down, this is a 10-point move, which would be $500 per contract on S&P futures, right? This is why we target that level. And that's how I would have traded it if I was trading live. I'd wait for at least, this stuff is not magic. We had the golden pocket and the 0.5 level. The 0.5 is just essentially half of this candle here, right? This imbalanced candle. But I would have been out, right? Like 10 points and I'm good. 10 points and I'm good. But in the long term, if I had runners or whatever, I would be targeting this area down here. But in this market, that's reacting really heavily minute by minute to whatever Jerome Powell says. If I secure 10 points, I'm good. But that's essentially where I would take that short. Hearing what? Who's this guy? What you mean? Let me know if you guys want me to go back to the Jerome Powell testimony. Is there not a flag on Meta? New to TA. A flag on Meta. On the daily or what time frame? You got to give me a time frame. This is not a flag. This is a potential double top. Right? You have this top and the potential double top. It's not a flag. I don't know why people listen to me, Kevin Z's like a million times. Kevin is great on real estate. Yeah, I'm not going to be buying any real estate soon. Any idea about Solana? No. We're not going to be talking about any cryptos here. Let's see what happened to that beautiful short that we would have taken. Wow. Did any of you guys take the short? Did any of you guys take the short? I hope you guys did. I mean, we're not talking about a 15-point move. Hopefully you guys did. All right, let's take a look at Oh, let me go over QuantumScape and why I took that short. Someone told me something about Hindenburg or something like that, but I had no idea about this, okay? Here's why I took the short on QuantumScape. Pay attention. So I took the short on QuantumScape because we had this overreaction on earnings, right? We had a 33% candle. That's fine. I don't short the overreactions. This thing can run for days or whatever. But it was significant that we did stop at this key level here, right? So that was the first thing that caught my eye. However, I'm not taking this short naked. The next day we had this inside bar. This is a major inside bar, almost right at the halfway level of this tall bar. This is when it started piquing my interest, right? And when I pulled the fib, you could see the golden pocket here. The inside bar top was right at the golden pocket. So essentially, I took that short from here because, you know, this candle right here, this impulse candle, to me, that the fact that it stopped right at the level from September was a sign that this move was extended. And even if we kept going up after this inside bar, I didn't have any faith that we would go much higher. So I set my stop limit at 12, a little bit above this candle, and I took it short from here. And this is why I didn't buy puts, because I didn't know if, you know, we were going to bounce around before coming back down. I just knew that we were at a level that QuantumScape had no business being at this point, right? And then obviously, if you look at the point of control, this is the area in which most volume occurred, this orange line right here. And the most volume occurred at around the $8 level, right? And this is going all the way back to even this pump here in August when it went all the way up to $14. So I took a wide range into account when trying to determine where most of the volume lied. So even if you take these extreme pumps back in August and back in September, the point of control was still at 8, which is where that told me that that's where most of the market was comfortable buying. So that's why I took that short with, you know, at $10 and change, $12 stop limit, $8 was our target, and we actually just got to $8.23 today. So that is why I took QuantumScape short. Pretty basic short, nothing crazy, but very optimal, which is what we're going for. And if you took this short, fucking congratulations. Congratulations. If you took this play short, I'm really, really, really happy for you. You would now be up 20 points, which is $1,000 per contract on the S&P 500. Yeah, and happy to showcase that for you live here. So Jonas Pond says, I got the short. Nice. Ahmad El Ibrahim says, I got the short. R. Jackson says, I took it on QQQ. Amazing. Hector, I took the short. Guys, I'm going to give you my P.O. box. I need a Chipotle gift card, okay? I made too many people too much money right now. That's what it looks like to me based off of this chat. Jonathan Bridgewater, yes, sir. Okay, yeah, I definitely need that. Oh, Jonas Pond, the biggest boss of today, the biggest boss of the chat. Jonas Pond took that short, made money, donated $100 of that to St. Jude. I appreciate you, man. Thank you so much for giving back. I appreciate you. Yes, I take it back. I forgot that we were doing a fundraiser. Don't send me a Chipotle gift card. Give it up to St. Jude, just like Jonas Pond did. If you made money on this play, give it up to St. Jude. Dr. Jennifer Berry, what's going on? Spy 398 gap fill. I don't know. I'm looking at you're not resentful for missing that at all. No, because I'm giving it to you guys. Why would I resent? I have the tools to be able to trade. I could do this every single day, right? So yeah, no, I'm giving it to you guys. I'm not resentful at all. If I did sound like that, I'm just messing around. Obviously, I don't have to live stream. I can, turn this off and go trade or whatever. But no, I'm just happy that so many of you all caught this. Alejandro Canto secured the bag. Dope. Cameron Nosworthy. Thanks, Z. Appreciate it. Yasas Jayanga. That's a dope ass name. I never heard that name before. I did short it. Awesome. Now time to play calls. I wouldn't play naked calls from here. I would take my short Go to the mall and buy something before your significant other finds out how much money you made. Okay, go buy something nice. Treasury bonds video, maybe. Jennifer Berry says SPY 398 gap fill. Let's look. I don't think so, Dr. Jennifer Berry. Not the way that the day is going. And I don't know if tomorrow Jerome Powell will have anything new to give, honestly. So yeah, I don't know that we fill that 398 gap. Now, are you asking if there's a gap there? Yes, there's a gap on SPY. You're so right. It's ever so tiny, but it's there. It's this one right here. Will we fill it? At some point, we will. Is it tomorrow? I don't know. I don't know what Jerome Powell might just take. You know, he might just take the paper that he wrote his speech on today and, you know, fold it up and put it in his pocket and bring it back out tomorrow and say the exact same thing. Who knows? You know what I mean? But I genuinely am really, really happy that a lot of you took this short. You know, again, if you traded the S&P futures contract, that's $1,000 per contract. So even if you just traded one, that's $1,000. I like the positivity. Appreciate you, Saad. How much is the Discord? Call. I mean, I guess it depends on the tier, right? We have a few tiers, so make sure that you click the link in the description and book a call with one of our ambassadors, and they will tell you. Ricky Moiti, the Academy Discord is the best out there, hands down. Appreciate you. Are you going to be going live tomorrow again? If you guys want, I will go live tomorrow. Just got back from walking my dogs. What did I miss? You should probably give your dogs up for adoption because you missed making money. I'm just kidding. Don't give your dogs up for adoption. But yeah, we had whoever was asking this, Ariel. I was just saying that I was monitoring this point right here, and it's crazy that it hit that to the tick. I mean, you would think that this is some sort of magic, but it really isn't. How do you play a ticker with many gaps? Can you look at HIMS? Why are you trading HIMS? Guys, stick to the same trading pairs every day. Stick to trading pairs that have a high liquidity, especially if you're trading options. Like, why would you be trading HIMS? Unless you are, you know, shorting or longing the shares, which is fine if you are able to do technical analysis, kind of like we did on QuantumScape. Don't trade options on something like HIMS, okay? Saad says, thank you for getting my name right. Yeah, of course. Took the same short on CL, you monster. You took it on oil? Okay, the crazy thing about oil futures is they move so much more in terms of tick value than the S&P or the NASDAQ. In the CL futures, this madman level man took, good job, by the way, on that trade. Every penny that moves in CL contracts represents $10, right? Every penny represents $10. That means that a full point move in CL contracts represents $1,000. That's just a full point move. So if it goes from 80 to 79, that's $1,000. So good job, level man, for shorting CL, you madman. Please go live tomorrow, Dilawar says. Okay, will do. Where did you draw that fib to get that level? Oh, you're talking about on ES? Okay, let's go over this trade. Oh, my God. This is now up 20 points. That's crazy. And again, I mean, this is the long-term area that I would have targeted, and we're there right now. And it's only because, I mean, even if you're just trading basic supply and demand, support resistance, you could see this level here, right? So it's not rocket science. But whether you call it supply demand, or whether you call it a demand zone or liquidity or whatever, it doesn't matter. The concept is the same. Okay, so where did I draw that fib? Here, we will redo the trade once again. Remember what I said, and rewind the tape, by the way. Rewind the tape. Remember what I said about not trading the initial reaction, right? You are much better off trading the aftermath. So this right here is the initial reaction, right? Jerome Powell says, I'm going to keep rates higher for longer, same rhetoric, yada, yada, yada. We get this overreaction. This right here, depending on who you follow, right? Depending on where you learn this, there are a ton of traders in history that have referred to these as imbalances. If you are an ICT trader, you will refer to this as a fair value gap. If you are an Al Brooks trader, you'll refer to this as a breakaway or breakout gap. It doesn't really matter. The crux of it is this is an imbalance here, right? And if you guys are younger, you probably heard this from ICT. This right here is a fair value gap, right? It's an imbalance. So as I was saying, don't play the initial reaction. Now, if you just bought puts at a breakdown of this level, that's fine, I guess, right? Is it a high probability play? Maybe on days like today, but on typical days, you're not going to get such a big move, right? But this is when Jerome Powell took the mic and started rapping that shit, okay? But what I was saying was, and you can rewind the tape and see what I said, is that you essentially want to wait for a retracement before taking this back down. And so I would not take this trade unless we filled at least half of this gap, because to me, it's not optimal, right? If we took a trade from here, which a lot of folks would have probably front run, if we took this trade here, then you would have to set your stop limit so wide because you still have all of this imbalance left, right? So I wait for at least 50%. We got there with this candle, but then someone asked me, how did you draw your fibs? Now, I corroborated this with a fib, and as far as I know, strict ICT traders don't use, well, I don't know, actually. I've never taken the program, so I don't know. But for me, I like to corroborate things with fibs, right? So I start at the swing high and end at the swing low. So I'm basically using this candle right here and this candle right here. And I'm drawing left to right, and I start at the top because we are measuring the up move, right? And that's essentially how I got this spot. That lined up perfectly with the 0.5 fib, and that's essentially where I would have went short. Now, if we kept going up, I would have likely added to my short and got a better average price, and I would have set my stop limit probably above here, above this candle here, right? But beyond that, I'm not risking it. So that's essentially the move there. No indicators, no nothing, just really measuring half of this candle here and then corroborating that with a fib. If you did have something like the 21 EMA, there you go. You now have 3 points of confluence, right? If you look at the green line here, and I don't know if you had VWAP, where that would have been, and VWAP too. Fuck me, even more points of confluence. You have VWAP, 21 EMA, golden pocket on the fib, and half of this imbalance here. This to me, I didn't even, because I was live streaming, so I didn't even look up the rest of the indicators. You have 4 points of confluence. This to me is an A+ trade here. So good job for those of you that took it. You are now up over 20 points. They're grilling Powell. Game over in 2024. This guy doesn't have a clear vision. His target is to rise the interest rate every quarter to bring back inflation to the 90s era. That's not possible. Not to the 90s era. We were at 2%. We were at 2% not that long ago. We'll go over that. David Samuel, whatever Discord levels you pick, it's the best value for money. Z provides value, period. Appreciate you, David Samuel. I really try to provide the best product possible. Really. Like, I want everybody to be able to fish on their own, to be self-sufficient traders, to achieve whatever goals that you guys have with trading, whether that's, quitting your job. If you love your job, maybe that's making more of a side income. Maybe that is, just the thrill of being good at something like trading. I don't care what it is. Whatever your goals are, I hope that you can achieve it through trading. That is really the goal of the Discord. I love when I see traders improve and even, branch out and say, hey, I'm going to go trade on my own. That makes me happy too. Even if they decide that they're so good now that they're just going to be trading on their own. Although usually I hire those people. Everybody I've ever hired in the company is from within the Discord. So Richard Sorn, I joined and I love it. Not trading much yet, still learning. Appreciate you. Very informative and helpful community. Thank you, Richard. All right. Just close the queues, run with the profits. Awesome. They're grilling Powell. What are they grilling Powell about? Who's this lady?
For their kids, for their babies, had a harder time doing that. This has devastated hardworking Americans, causing a kitchen table crisis in every corner of our country.
By the way, do me a favor and hit that thumbs up, please. Especially if you're on your way out, just hit that thumbs up. Let other people find the stream. Do it for this lady in the magenta jacket.
Transient. Inflation has remained persistent, high, and well above the Fed's long-run goal of remaining under 2%. In the coming year, what factors and indicators are you paying attention to as you and the Federal Open Market Committee decide on whether to increase rates?
So I'd say a couple things to that. First, we're going to be looking at inflation in the three sectors that I mentioned: the goods sector, the housing sector, and then the broader service sector. And we need the inflation that's already underway in the goods sector to continue, and that's really important. In the housing sector, we just need the time to pass so that reported inflation comes down, and it's effectively in the pipeline as long as new leases are being signed at relatively small increases. So we'll be watching very, very carefully, though, at the larger service sector, which is 56% of consumer spending, and more than that of what's currently inflation. So that's one thing we'll be watching that very carefully. Also, we raised rates very quickly last year, and we know that monetary policy, tightening policy, has delayed effects. It takes a while for the full effects to be seen in economic activity and inflation. So we're watching carefully to see those effects come into play. So we're aware that we haven't seen the full effects yet, and we're taking that into account as we think about rate hikes.
So when you're looking at this, obviously not to get into a policy discussion, but if there were an increase of energy production in this country, do you feel like that would help drive down inflation? Well,
I think over time, more energy would mean lower energy prices. But we are very focused on what we call core inflation, because that is what is driven by, really by demand, and our tools are really aimed at demand.
Right, understood. But I feel like the cost of energy is not just what you pay at the pump. It ends up affecting every good across this great nation.
I love how every single one of these politicians has a Rolex. If I'm not mistaken, I think she's wearing a Rolex, but so is Jerome Powell.
Having to be displaced in order for us to maybe get to the inflation rate that we would like as a nation. I'd like to focus on the labor participation rate. So right now it's 62.4%. If there were an increase in people coming back into the workforce, would that be a positive factor with regards to driving us down to the 2% rate that you would want to achieve?
I think that it would. I mean, remember those people coming into jobs. Yes. That would be great, because the economy clearly wants more people than are currently working. Of course, those people would then spend more, so it wouldn't be a zero-sum game. But it would be great for the country and great for them if they were to come into the labor force.
Amen. I believe that increasing in capital requirements on financial institutions would have a chilling effect on the economy and the availability of financial services. And last week.
All right. So somebody was asking me earlier about the inflation rate, saying getting it back to what it was in the 90s. No, I mean, I don't know how young you are, but in 2016, inflation was actually less than 1%. We had it at 1.3%. 2017 inflation was at 2.1%. 2018 inflation was at 2.4%. So all right around the 2% target. 2019 inflation was around 2%. 2020 was when shit got out of hand, right? Because of all of the post-pandemic policies. So we're not talking about an inflation rate back to the 90s. We're talking about an inflation rate back to really, if we had to put a marker on it, back to the Trump era, right? But yes, I mean, in the 90s under Bill Clinton, inflation was also historically low as well. But that 2% target is what they want to get to. And, you know, some of you may be asking, why do they want inflation at all? Why don't we get inflation to zero? Well, the reason that they want a little bit of inflation is because it promotes spending. So if there is no inflation, then consumers will not be inclined to spend their money now. If there's just a little bit of inflation, then that is just enough of an incentive to spend money now, right? Because if you think that your dollars are going to be worth slightly less next year than they are this year, then you are likely to spend. So that 2% they found over time is, is the optimal target, right? Chances of 0.5% raise in March over 50 now. I think that will go down because this is based on traders, right? This right here is based on trading. And so a lot of people probably bought contracts for March betting on a higher rate. But yes, I mean, still, that's thank you for pointing that out. Right before the meeting, we were at 30%. It was at 29, and now we're at 50-50. Actually, slightly higher chance of doing 50 in March. That's crazy. And if that happens, I do think the market will likely match December lows. Thank you. You are a great. Thank you. You are great. I'm a stronger trader. Appreciate you, Robert. Appreciate you. You were a top guy in every field. That is my TA about you. Thanks, Mr. Traveler. Appreciate you. Proud and real. Why is she laughing about kitchen table problems? Yeah, I don't know. Shipping costs back to 2018 lows, yet prices remain the same, if not more. Consumers are going to be in pain for a long time. Hawkish or dovish? Rewind the tape, Sagar. All right. So in this case, I appreciate you guys for joining. We will be live streaming tomorrow as well. We will be doing another fundraiser for St. Jude as well. Appreciate you guys. Hopefully you guys took this monster ass trade here. I would not short anymore, especially since we took out liquidity at the 4,012 level and we created new lows for the day. I personally don't think there's an optimal short here. But yeah, hopefully you guys made money from this, and I appreciate you. I will see you guys tomorrow because you guys want me to live stream tomorrow. So we will do this again tomorrow. Stay safe out there, traders. Oh, someone had asked me about this hat, thetravelingtrader.com. That's where you get this hat. And yes, they're still available. So that's where you get the hat. Follow me on Instagram and Twitter for daily free finance and trading content. And yeah, if you want to join the academy, click the link in the description. Stay safe out there, traders. Peace.